Welcome everybody back to another episode of Proof of Vision. Great episode today. We had on Mike from ETHFI. Mike is the co-founder of ETHFI. For those of you that don't know about ETHFI, they started as a liquid staking protocol, used EigenLayer and the restaking part of what EigenLayer offers to staked ETH, and really ran with that, right? And what's been really interesting lately is you can kind of see how they've progressed their business from staking. Then they built vault products on top of the staking base layer, and now they're bringing to market a new product called Cash, which is essentially a savings account on chain based on the ETHFI staking assets and some of the other earn products that they've built on top of it, and kind of created this on-chain money Lego, right, where you can now use your on-chain assets for general expenses in the real world, which is a huge unlock for a lot of regular users like me and you that have a lot of assets on chain, obviously, and want to use them in the real world, but also for enterprises in crypto. A lot of DAOs have high need for something like this. A lot of different organizations within crypto that have a lot of treasury value on chain but can't necessarily unlock that off chain. This has been I think going to be a big unlock for those types of users. So really hope you enjoy the episode. Obviously, if you do, please like and subscribe, and we'll see you on the next episode of Proof of Vision. Take care. All right, welcome everybody back to another episode of Proof of Vision. Really excited today to have on Mike. He's the co-founder of ETHFI. For those of you that don't know ETHFI, I'm sure you do, but if you don't, they have just launched a very, very interesting product in the last couple of weeks that allows you to kind of leverage your crypto portfolio and use that in the real world to actually spend and purchase things and live. So really, really glad to have you on, Mike. How you doing today?
Yeah, doing great. Thanks for having me. Excited to chat about this.
Yeah, absolutely. So I always like to start, with a little bit about your background. Talk to us a little bit about like what your background is, how you got into crypto, and what led ultimately to the founding of ETHFI. Like, what problem did you guys see that you were trying to solve, and what's kind of like the vision, that made you want to, start the project?
Yeah. Ultimately, I just got super excited during DeFi summer that people were actually starting to build real products on chain, and I felt like I had to be part of it. I got a lot of conviction pretty early on that I think once you use DeFi, it becomes really obvious that eventually everything's going to go in this direction, even in the current kind of like rough state that DeFi is in. After using some of the the OG protocols like Compound and Balancer and Uniswap and whatever, all the early projects. It became really clear that there was an opportunity to build something substantial in this growing space. And so that's what led to the creation of EtherFi. And what we're building is really a new category of thing that we're calling a DeFi bank. It's not a bank in the traditional sense, but it's an end-to-end alternative to traditional banks built on crypto rails. So with EtherFi, you can more or less do everything that you normally do with your traditional banking setup, meaning you have the analogous to a savings account, analogous to an ability to invest and deploy capital in DeFi, and the ability to have an attached credit card that lets you spend or borrow against your DeFi assets, all in a nice, easy to use integrated app that looks and feels very much like what you'd be used to with like a Revolut or a Neobank or Chime or whatever kind of neobanking solution that you're comfortable with.
Awesome. And obviously this has kind of been, the culmination of like several years of like building the product, to this point, right? And so I think when you guys came out, you started simply with just stake, right? Stake your ETH, stake your BTC, stake some of your assets and earn yield. I was curious. I was always curious, specifically with ETH, right? Because you guys started with ETH, I think, and then broke into other assets as you went along. But obviously, for a lot of people, Lido was like so dominant in like the liquid staking game. That it's very hard to break into, I guess, similar to like how Aave dominates lending, right? You gotta have like an innovation edge, I think, to take market share away from the incumbent when somebody's that large. So what made you guys so confident in your product, or like what do you think the edge was that you guys were looking for to kind of take market share and convince people that ETHFI was a viable alternative to maybe like Lido or some of the other LSTs back then? Maybe you could take us through that a little bit.
Yeah, that's a great question. So yeah, staking was our very first product. It seemed to us that as a starting point, that was a good place to be, to build out a staking solution and get lots of users and TVL, and use that as I guess a basis on which to launch the liquid product, which is the DeFi automated strategy vault, and then the cash product, which is the non-custodial wallet and credit card. So it was this sort of staged rollout of this DeFi bank concept. With staking, I mean, the biggest, the most obvious reason that we kind of went after the space is, one, it was the largest. It was the largest category in DeFi. I think it still is. And with restaking becoming, it was very nascent in those days, but with restaking starting to become interesting, that was the bet that we made, that was going to be an opportunity to to build something that's differentiated and can take a good chunk of market share in the ecosystem.
Gotcha, and that makes sense. And it's kind of like I think when you guys came out, right, kind of the eigen layer, like points chase, as I like to call it, like it followed shortly after, right? And I think one of the things about ETHFI, right, was that you guys were one of the first to like offer like native restaking, into EigenLayer through your offering. And also, I think you always had withdrawals available, compared to like some of the competitors that you weren't able to actually withdraw your assets, for a certain amount of time. So maybe talk about that. Was like, was that the plan all along? Like how did you guys come across and get exposed to EigenLayer, and like what made that so attractive, I think, for your business model?
Yeah, so I mean, we saw it early on. When we started ETHFI, EigenLayer was in the very early days of building. I think they had raised a seed round. They had published their white paper, and in reading that, we got pretty excited that there was an opportunity there to build a product kind of around that, with restaking natively integrated into the protocol. So it was a pretty big bet to make, that people would care about this, and that it would be a big narrative. And yeah, it ended up being more right than I think any of us expected. In the sense that the market just kind of completely lost their mind and went crazy around restaking, and so that obviously worked. Really worked in our favor.
Right. Yeah. And I mean, it was a wild time, right? With with the points chasing, and then obviously like the Pendle integrations that kind of took it to like a whole nother level, with the speculation. And so it was kind of like this crazy growth period, for LRTs, and I think LRT providers. And then I think recently, right, or I don't know what kind of time period I'll put on it, but it's kind of muffled a little bit now, right? I think some of the critics of EigenLayer, maybe of like restaking in general, have maybe pointed out that like there's not really a whole lot of demand on the ABS side yet, for the shared security. Like what are your thoughts on like the current state of maybe like the LRT game, and where we sit with like the tech stack and the economics of it?
Um, yeah, look, I think as tends to happen in crypto, the restaking narrative got, like so many other narratives, overplayed, and everyone kind of went crazy and thought that the next day this thing's going to take off and there's going to be a million AVSs and restaking networks and so on. And I think even in the very beginning, I said, look, it's fine to get excited and and try and really push this narrative, but it realistically is going to take years for these things to evolve and develop. And I think that's probably what we're going to see is probably a matter of years while this space matures and restaking networks actually start getting customers and generating revenue and then start paying out for the economic security.
Yeah, that's a fair assessment, I think. Yeah, and you already are, I think, starting to see like some movement on the ABS side. Like, I don't know if you saw cap money, and kind of what they're doing with with the shared security, kind of creating this insurance, for like a CDP. Those kinds of things are very interesting, to see rolling out finally, and kind of utilizing this shared security, and hopefully we'll see more and more and more of those things coming from like DeFi native companies, right? That I think are probably the first ones that are going to be able to really leverage the technology. So it's definitely cool to see things like that rolling out. But anyway, so I guess that's the LRT part of the business, right? That was stake. Very simple, kind of the base layer of the rest of the products that I think you're building. Now let's talk about liquid, right? You guys had stake, and then you introduced liquid to the market. What was the thought process for liquid, and what was the value capture there, or what was the value you guys were trying to provide with liquid?
Yeah, I mean it's a pretty natural sort of progression, across all three products. The first product is, you could almost think of it as analogous to a savings account that pays kind of the native interest rate of the ecosystem. And so you take your ETH or your BTC or USD and you deposit it, and you're getting kind of like fairly low risk, rate of return on that. And so then the question becomes, well, all right, great. I've got this liquid staked asset. What can I do with that? Well, you can go and deposit it to various DeFi projects to earn higher yield in exchange for some additional risk. And many people, of course, do that. But that's a lot of work, and you have to kind of micromanage your positions and move stuff around and chase yields. For many people, myself included, even even for power users, they don't want to do that. It's a lot of work to do that kind of micromanagement. And so what Liquid does is just automate that for you. So you've got your staking asset, you put it into Liquid, and now it's deployed into DeFi. It's earning a higher rate of return, but in exchange, obviously, for some additional risk on the DeFi strategies that it deploys into. And then the next thing is great. I've got all these assets on chain. Number go up. Well, what can I do with that? What's why do I care? Well, you want to use it in real life. You want to be able to either borrow assets against that, or just directly spend what you've earned. And so that's where cash comes in. So with Liquid, we currently have I think about a dozen different DeFi strategy vaults, depending on what you want to do with it. And then with cash, we just launched this wallet and in the credit card program. So now you can use those assets in real life, and all of it is packaged in this one integrated app experience that, as I said, has the sort of look and feel of a traditional fintech experience.
Pair Protocol is the first and only trading platform for narrative trading. Their technology unlocks the ability for anyone to pair trade. For example, if you think ETH will outperform Cardano, you can long ETH ADA in one click with leverage. Or perhaps you think Pepe will continue to outperform Doge. You can long Pepe Doge. Again, all in one transaction. The combinations are endless. Learn more at beta.pair.garden. Right. No, and obviously I think timing is probably more coincidental than anything else, right? Because you guys have been building this and structuring this for quite a while. But like, has the recent shift in like maybe I mean, we haven't seen any regulation yet, but I guess the recent shift in like sentiment for crypto across some of these governments, primarily the US, do you think that played a role at all in maybe like the timing of releasing the product? Or like, how do you guys feel that the regulatory headwinds kind of impact the ETHFI's business model moving forward?
I think certainly there was an impact in opening up staking and the cash product to the U.S. That had an impact. Previously, we had geofenced the U.S. And none of our products were made available there. But because of recent changes, we decided to make it more open to Americans.
Gotcha. Okay. No, that makes sense. So let's talk about cash now. Okay. So I understand, you've got your assets, on your portfolio on chain. I'm assuming you maintain full custody of these assets, in the setup of cash, right? Gotcha. Okay. And then, when I want to go and spend it, which by the way, you need to get Ohio whitelisted for this product because it's killing me right now. Ohio's killing me. So I'm going to lobby you right now on this podcast to figure out Ohio for me. But anyway, yeah. But anyway, so I want to go spend my crypto, right? Or I want to use this card in real life. What's happening behind the scenes? Am I drawing directly against my capital? I know there's a borrow function, that you can play with as well. Maybe describe like the user flow and the user experience for the user.
Yeah, so you can almost think of cash as like two products. There's the cash safe, which is the smart contract wallet, and smart contract wallet, and then there's the cash card, which is the actual card program. So all of the functionality of leveraging your crypto and doing stuff there is within the cash safe product. And what the cash safe lets you do is you can deposit either USD, like DeFi strategy positions, staked ETH, BTC, all these different things. You can deposit it into the cash safe, and then within the safe you can borrow stables against your position. And once you've done that, you can then use the card to actually use those to spend money in real life. So that's one option. You can just borrow if you want, and that makes sense because currently the liquid USD vault, for example, is paying I think it's like 10 or 11% last I checked, which is pretty great. And then currently the interest rate to borrow on the cash safe is actually 0. So you can like arbitrage those. That's a promotional thing. That's only there for another couple months. But that's going to change. I mean, it will change, but it'll still be kind of native internet rates. It'll still be kind of whatever rates you see on Aave, which these days are around 4 to 5%. So it's still a great deal. And there's no liquidation risk because you're borrowing like assets, for example. But anyway, so you can do that, or you can just spend your assets directly. So you can deposit, USD or ETH, and then just convert that. It automatically converts it to stables whenever you want to spend, and then the card just uses those
Yeah.
assets.
Interesting. So what one thing that's occurred to me is, so like let's say that I've got some ETH, I've got some BTC, and I've got some stables, in my safe, and then I'm directly spending it. So I'm not borrowing against it. I want to directly spend, out of those assets. Is there a way for like me, like let's say like, hey, like I want to spend my stables first before I ever touch my ETH or my BTC? Like, is that what it defaults to, or like is there flexibility there for the user, or like how is it happening in that scenario?
Yeah, you just choose which
kind of
asset it prioritizes. Yeah, so you can choose, for example, you can choose to have it prioritize USDC, or you can say, spend my liquid USD vault. So in other words, it's a yield bearing asset that just sits there earning yield, and then when you spend, it just deducts from that. So you can almost think of it, depending on the amount you have deposited, as almost like a self repaying loan. in a sense, right? Because you if your spending is less than the what you're accruing, then you can just basically live off your crypto earnings.
Yeah, yeah, gotta love that, right? And obviously hugely useful for many different groups of people, utilizing a product like that, especially on-chain natives, which I'm assuming this is probably your first target user
That's what
group,
it's
right? Is like,
targeted for.
you're right.
Exactly. Yeah. I mean, anybody who transacts a lot in DeFi, who has most of their assets in DeFi, which I do, um, this is so much better and more convenient than the alternative, where you have to pull your assets out of DeFi, put it into some exchange, sell those assets for stables, send it to some custodian, and then maybe send it to a bank, and then pay off your credit card. And it's a process that's super expensive, very time consuming, and this is much more kind of streamlined and easy. And it really allows you. I mean, at this point, it's I would say the MVP of being able to kind of live your life on chain and completely move off of your traditional banking rails. Within, I would say, a matter of months, it really will be kind of an end-to-end alternative as we integrate fiat, as the fiat on-ramp, off-ramp gets more kind of comprehensive in both USD and euros. We're going to obviously start integrating the various payment solutions that are out there, so you'll be able to pay your mortgage, your bills. You really will be able to just kind of live your life on chain with this thing.
Yeah, no, that's awesome. Especially being able to just, if I want to deploy, money from my paycheck every month into like something like the earn vaults, or the liquid vaults, being able to allocate directly from your bank account obviously is going to be a huge unlock for a lot of people. Um, on the borrow side, I'm curious a little bit too. How is that working under the hood? So like, is this are these funds being borrowed like out of like an Aave type setup, or like where is this lend borrow market, I guess, actually existing?
Yeah, you got it. It's exactly, it's an Aave market. It's our own Aave instance that is being deployed. And so yeah, I mean, it's decentralized, so anybody can lend. If you want to lend to people borrowing on their card, then you can do that. Or if you I guess as a borrower, you can make use of this market.
Yeah, it's interesting, and I think that's actually a key, I guess, technical part of what you're doing, because if this was like tied to like the public Aave markets, well, not the public ones, like a regular Aave v3 instance, right? Then like I'd be afraid that my interest rate would just like skyrocket, in periods of volatility, right, where the utilization rates are just insane. Um, because then you really got to worry about the rate that you're paying. But I would imagine with your own instance, obviously it's a little bit more controlled. You guys probably have more control over the parameters of it, I would imagine. But do you ever see a
Yeah, I
scenario
mean,
like
it's
that?
still it is still a variable rate. So I can't absolutely promise that the rates, or we can't promise that the rates will never spike, because ultimately we don't have total control over it. But it should be a lot more docile, because this market isn't used for looping, right? No one's going to borrow USDC, put it into Athena, deposit the Athena. That's why the rates spike, is because people are farming high yielding stables on Aave. In this case, it's just not what it's designed for. So the yield should be a lot more docile, and the borrow rates are lower, right? Because these are people actually borrowing for their day to day life, rather than for the financial engineering strategies, which tend to require a lot more capital.
Mhm. Right. No, okay, that makes sense. All right. So that, I think that solves one like little hiccup that I saw. So you guys have already kind of solved and planned for that, which is great. Now we talked about the user groups a little bit, and we've been talking mostly about like on-chain natives, like retail stuff like that. Do you envision also offering this to like DeFi native corporations or like DAOs? Is there a separate product or within this product that's kind of specifically tailored for those types of entities, or?
Yeah, you got it. That's exactly right. We do have a business product. It's the it's our corporate offering. We have now. I mean, it's early days. It's basically people self-signing up. We have 30 DeFi companies that have signed up so far, but I mean that'll grow to thousands. So it's 30 in the first week, and these are folks that have KYB'd, so they've gone through the process of getting through compliance with their business. And what that allows you to do is, if you are a crypto business that has assets on chain, this lets you actually operate on chain instead of having to keep your money in a bank so that you could pay folks salaries or make payments or whatever, or deploy your treasury. You can just do that entirely on chain now, and you can be earning DeFi yields on your treasury assets. You can issue cards anywhere in the world. So because it's based on where the entity is located, you can issue cards to employees or contractors anywhere in the world. Those cards have expense policies. You can export the data and plug it into your accounting system. It's sort of like a Brex for crypto businesses.
Awesome. Yeah, that's really interesting. And do you envision being able to, because a lot of these companies, right, or a lot of these enterprises on chain, most of their treasury is going to be in their native asset usually, right? Like there's a bunch of their native asset that they really can't deploy to liquidity pools or do much with because, people will freak out. But do you envision being able to enable like those entities to tap into some of that liquidity or some of that equity that they have? Gotcha.
Yeah, that's
okay,
exactly
so then,
right. So
go ahead.
it'll be at a very low LTV. But it's better than nothing. And if you have, $100 million of your own token sitting on your foundation balance sheet, being able to borrow even a few $1,000,000 at lower interest rates against that is pretty valuable, right? It lets you operate day to day. And so for sure, that's one of the options that will enable, and that is better. I mean, from their community standpoint, that's a lot better than them dumping their token on the market just to finance their operating costs. That's one of the features that is available.
Nice. Yeah. See, that's a huge unlock in my opinion, because again, like we just talked about, like most of these organizations are very like rich in their own asset, and you literally can't do anything with it right now. Obviously there's OTC deals that happen. There's some of these things that happen that obviously retail gets very upset about, and there's this constant like sell pressure on the token because let's be honest, right? A lot of teams that are maybe not as bootstrapped as other teams, they're selling their token for operating expense, right? They're selling their token to pay their employees to keep the lights on. So like something like this is like a huge unlock, I think, for crypto, being able to just, like you said, borrow at very low LTVs. That eliminates the sell pressure, obviously, unless there's a liquidation. But that just kind of creates like another realm of funding, I think, that like has not really existed, or it has existed, but it's not as above board, maybe as this. So I would imagine you're going to see a lot of interest, on the corporate side of things for a product like this. So that'll definitely be interesting to see roll out, as you guys continue to grow. So, obviously, for a lot of crypto natives, it kind of becomes like this ease of access thing, being able to tap into your assets. Do you envision this being mobile friendly? Are you guys coming out with a mobile app that will pair up with this? How are you thinking about that?
Yeah, the iOS app is, depending on when this airs, may already be out. It's basically any day now, and currently it's a mobile web app that is primarily what most people use. But the iOS app is going to be out there very shortly.
Awesome. So, and again, just from a user experience standpoint, I guess just being able to access that from your phone, right, and do things, with that. I guess you could just add the card to your Apple Pay, right? It's as simple as that, and then you're off to the races. Yeah. So, yeah. Okay. So you've got the. Would you call this the full product stack at this point? You've got stake, you've got liquid, now you've got cash. And this is kind of like I wouldn't say the end state of the product. Obviously, you're going to iterate and continue to improve it. But is this the main product that you think you're envisioning takes ETHFI forward, for the next couple of years?
Yeah, I mean it's the MVP. There's so much feature development and functionality that needs to be added. One of the benefits and challenges of being in crypto and DeFi is, our customer base really is global. We have customers from, Brazil to Thailand to North America to, Europe. So, I mean, just if you look at the map of adoption, just like a heat map, I mean, it's the entire globe, basically. So that presents challenges, but what that means is we need to integrate with like every single kind of random local payments provider. So we need to eventually integrate with, a Venmo and a Cash App and a Pix for Latin America, and I forget the one that they use in Europe. So every one of those we need to plug into. Eventually we'll need to plug into payroll and like there's we'll need to make it easy for you to do your taxes, which again is very jurisdiction specific. So like this it's a long roadmap to fully make this product kind of an end-to-end banking alternative, but what we have now, I would say, is an MVP. I mean, today I probably do, I don't know, probably 70 to 80% of my quote-unquote banking on ETHFI. But yeah, over time, I want to get that to 100%.
Vertex is a lightning-fast order book DEX offering spot, perpetuals, and money markets with unified cross-margin and a vertically integrated product suite. With Vertex Edge, users can tap into the power of shared cross-chain order book liquidity across Arbitrum, Blast, and Mantle, while earning trading rewards in VRTX, ARB, and MNT. Traders can access over 50 spot and perpetual markets alongside the GMCI 30 and meme indices, with low-fee trading and capital efficiency, all while preserving self-custody and on-chain settlement. Learn more at vertexprotocol.com. Gotcha. No, it's really interesting, and this is obviously a piece of the puzzle in terms of like the banking and like the credit products that are out there. Like, do you ever envision, obviously this is an under collateralized lending type product, like do you ever envision maybe introducing something that looks like traditional credit onto something like a product like this, or like how do you think about that?
Yeah, that's the power of having like a rich history about every user, where you have visibility into their various on-chain assets and behavior. That over time, this is obviously, there's regulatory implications to this, but we want to be able to offer some sort of credit facility. For somebody that let's say they have millions of dollars in assets on chain that they have deployed, they go to a traditional bank and try to get a loan. The bank says, okay, none of this exists from our standpoint. And so you can't get even the most basic services. Whereas in our case, I mean, we have a pretty rich understanding of that user, and so we would be much more capable of providing credit facility, whether that the assets are kept in ETHFI or not, and work with those folks versus a bank that will force you to off ramp, deposit your money in some 1% APR checking account, and then great, they'll give you a loan. I think that's very much what you get with TradFi.
Yeah, for sure. No, this is where I think like DeFi really starts to like take over, and really eat TradFi's lunch is things like this. And like, if you think about it from like a digital asset perspective, yeah, like none of the banks are ever, like I would highly doubt that they would ever be in a position to really like underwrite these digital assets. They just don't have the knowledge yet, maybe in like 30 years, if they really start seeing this and taking this seriously, they'll have that ability. But being able to underwrite somebody and kind of give them like a credit rating on chain, right, is like something I really only foresee like a crypto native company being able to really do effectively, at least at the beginning. So it'll be really interesting to see, how this plays out over the course of the next few years. But yeah, being able to offer people like I know it's a nightmare. I've got several friends, right, that they've got they've got excellent portfolios, right? They have a ton of on-chain money, and it just means nothing in the real world, right? Like it means nothing to these banks that you're trying to buy a house, right? You can't use that as collateral or like as any kind of like form of credit to like convince the bank that you're credit worthy, to be able to buy these things. So seeing crypto native banks, and crypto native companies kind of take that, I think that's going to be a big watershed moment for the space.
Mm-hmm.
So
yeah,
yeah,
100%. I think it's coming. I mean, I really, it's so as I said earlier, really once you start using this stuff, it's so obvious that eventually this is the way everything is going to be managed.
for sure. And so I always ask everybody this, just curious to get your thoughts. So obviously, ETHFI has its governance token. You have the ETHFI token. How do you envision this playing out, like moving forward for like the token itself? Like, are you guys thinking about ways that like all of these products kind of feed value back into the token? I'm just trying to get a good idea of a lot of the founders I talk to. Like their train of thought has changed a lot more now that maybe the regulatory winds are changing a little bit. So they can get a little bit more creative. How are you thinking about maybe the evolution of the token as it exists and what its role is going to be moving forward? If you can share anything, which I know it's touchy.
Yeah, I mean it's very straightforward. So all revenue that flows through the protocol, that includes stake, liquid, and cash, which is pretty considerable these days. All of it, a rev share is applied to buybacks of the token. So that's it. Very straightforward. We plan to continue that. In fact, scaling that up over time. To get more and more, larger share of revenue as the the product grows and profitability continues to increase. We're one of the very few DeFi protocols that is actually very nicely profitable. So we're not having to dump our treasury to pay for operating expenses. The protocol has revenues. So that's a very unique position. I mean, I probably count on one hand the number of protocols that are able to do that. So and again, value accrual is direct in line. We recently announced that a certain category of revenue from staking, in particular, it's kind of like the exit queue revenue, which fluctuates up and down pretty significantly. All of that is actually going to buying back ETHFI. So yeah, it's a pretty material value accrual mechanism. I think that's going to become table stakes over time. I really think you're going to see differentiation between protocols that have direct value accrual and protocols that are just kind of not, that just don't do that. And so then there's going to be a differentiation between tokens that are basically meme coins with the name of the protocol. Or protocols that actually have a direct, connection between the token and the value that that it generates for the project.
Yeah, it makes sense, and I agree, and hopefully we see a quote unquote return to fundamentals sometime soon, and instead of living in this this speculative bubble that seems to plague us everywhere we go. But hopefully people wake up and realize that it's not meme coins that you want to invest in. It's actually like maybe coins like ETHFI or Aave or, these protocols that are thinking long term about how can we, use this value from the product side and like actually infuse it into the token. Those are the ones that I want to be holding anyway, not financial advice, of course. But also I think you have to be careful with it as well. Like I think you see this with Athena right now, right? Where, I was listening to an interview with Guy, I think a couple weeks ago, right? And he talks about how, like, yeah, there's this fee switch, right, that everybody wants to see turned on, but those dollars or that revenue, instead of redirecting it back to like token holders at the beginning, it'll probably better serve token holders long term to reinvest that money into growth, right? And in really growing the business and growing more revenue and creating more usage for USDE, right? And then at a certain inflection point, you start turning on the fee switch to actually share revenue with token holders. And that's really the balance, I think, that you've got to find for your business, is like, when is the right time to actually stop reinvesting this revenue in the business and maybe actually starting to pay out at like a dividend, or something like a dividend, or whether that's the form of a buyback and burn or whatever it looks like. So that's my thoughts anyway. I think I agree with that.
Um, I would say the problem in crypto is the default is people make promises and don't deliver. And Athena is great, by the way. I'm a big fan of Athena, so I'm not talking about Athena here. But in 99% of cases, people make promises and they don't deliver. And so the reason we turned on the fee switch, and we started it at 5% of revenue, and then with this execute revenue, maybe that ramps up to like 10 or 15% of revenue. We want to increase it over time. We wanted to, put sort of our money where our mouth is, not make promises, but actually deliver. And so it's not, okay, we're going to hit this threshold and then this and then that. It's like, no, we're just going to do it. We're going to turn it on day one. And then over time, we're going to continue to scale it. So I think that kind of credibility is what builds trust, and a strong brand is that people see the team, is responsive and cares about their token and actually, again, delivers. And over time, I think that that gets credibility, and that's why, I mean, our TVL in ETH terms has been up only basically the entire time we've been around. Whereas obviously most projects TG, and then things kind of fall off a cliff. But I think we've done a great job of building a strong brand and a loyal user base that likes what we're building and trusts us, and we'll continue hopefully living up to that.
Yeah, no, it's a good counterpoint, and I agree. You're right. I think you could go to it from either end of that spectrum, and I think you'd be headed in the right direction, as long as the token, I think, and the token holders are kind of in the forefront, of the design. Then I don't really think you can go too wrong, in those terms. Well, awesome, Mike. I mean, this has been great. It's probably a good time to start wrapping up. Is there anything I missed? Anything you want to talk about maybe that's got you excited for ETHFI? Obviously, you just released the cash product, so that's exciting. But anything you want to share in terms of like what's next? Like, what can people really look forward to for any of the segments of the product?
Yeah, the most exciting thing that we've got, I mean, the big focus for us is this integrated DeFi bank product. And so, we'd love for folks to come and check it out. To go to ether.fi. If you're in one of the many supported jurisdictions, you should be able to use it. Ohio coming soon. So just try it out. Honestly, it's pretty great. Even if you don't get the card, you can still make use of 80% of the product and play around with it. One thing that's sort of underplayed is it really is one of the safest ways to keep your money on chain, because it's a smart contract wallet. But it's got a lot of bubble wrap over it, and it's got social recovery and lots of good stuff to keep you safe. So that's something we're going to be talking about more and more about. That it's just DeFi needs to be made safer. It can't be that like you click the wrong button and all your money is gone. So we try to have the best of both worlds, where it's self custody and it's safe. And then the big feature that we've got rolling out shortly is the fiat on ramp off ramp. So that'll allow you to really treat it like a virtual bank account, and just kind of live your life on chain. So yeah, go to ether.fi and check it out.
Awesome. Yep. Well, you heard it here from the man himself, guys. Well, if you're listening to this, obviously check out our show links to go find ETHFI. Definitely check them out. A lot of exciting things going on over there. I will definitely be checking it out as soon as Ohio is whitelisted. Hopefully that's sooner rather than later. Thank you, Mike, for that. But other than that, thanks for your time, Mike. Really, really appreciate it. And we'll see you on the next episode of Proof of Vision, everybody. Take care.